Welcome to WLFT. My name is Chris Danton. I'm the host today, and I'm really excited about the information that we would provide today. It's in reference to your health insurance deadline. When I called up the station, maybe from my past history, I was the host of a financial talk show, and I thought, you know what, a lot of people really need to hear this information. I know it's been very confusing. We've heard of a lot of different things that have maybe fallen through the cracks. And so I brought on a friend of mine and a representative for BlueCross, BlueShield, just to maybe answer some of the questions and concerns we might have. So please welcome John Howard, my friend.
Thank you. Thank you, Chris.
One of the first questions that we really want to focus on is, what is the difference between Obamacare and the Affordable Care Act?
Okay, that's a good question. Actually, every day we get people calling in, and we like to reference it, as the law is really called, which is the Affordable Care Act. And in actuality, it's the Patient Protection and Affordable Care Act, which is a little bit of a mouthful. So we will discuss this with people and call it the Affordable Care Act for short, and they don't know what we're talking about until we reference Obamacare. It's funny, actually, because Obamacare is a moniker that the critics of the law actually gave it, and it's really stuck, and people really know the law that way better than they do the official name of the law. And funny as it is, President Obama has oftentimes used that to his advantage by saying he really likes being associated with the law in that way, because he feels like it's a law that's really helping people. And so anyway, it's funny that people don't really think of it as the Affordable Care Act. They think of it as Obamacare.
Well, it makes sense. I mean, it's easy for those two to be joined together.
It's true. It's true.
And I know one of the major topics and one of the major concerns about the Affordable Care Act and Obamacare is pre-existing conditions. Do those individuals that have those pre-existing conditions, do they fall under a certain type of policy? We know in the traditional world that when you have pre-existing conditions, they might insure you, but you might have a rated policy, or there might be exclusions. Is there any differences?
That's a great question, and we do get that a lot. I've actually had people in my own personal life who are like, well, I'm not going to get the insurance because I have these problems, and I know that I'm going to get declined, or it's going to be too expensive for me because of my pre-existing conditions, one or the other. And the answer to your specific question is no, the policies are the same, the plans are the same, the coverage is the same. It doesn't matter what your health conditions are. Part of what the law has done is kind of turn the individual market. I mean, traditionally you have employer-based market and an individual market, and then the government provided programs as well. But if you look at the employer-based coverages before and the individual-based coverages previous to the law, what you saw, the differences between the two, the main differences between the two were that if you got a job and you got onto your group health insurance plan, your pre-existing conditions didn't stop you from getting the insurance, and it didn't raise your premiums. That's one of the differences. The other one is that it's gonna, they're gonna pay a portion of your premiums. Typically, your employer is going to pay a portion of that. Well, the law that President Obama and the administration pushed through is going to actually kind of mimic the traditional employer-based coverage in the sense that it's going to, you can basically break it into those two parts. The law is going to tell the insurance companies what they have to cover and who they have to cover. Okay. Now, the what they have to cover is, some of you may have been hearing, the president talk about the junk insurance that was out there before and the bare bones kind of policies. We no longer can carry those as of 2014 and going forward on any new policies that we write. Insurance companies now have to comply with the 10 essential health benefits. They have to have the full, robust plans. That's kind of all they can offer. So that's the what they have to cover.
And I think it simplifies the whole process, because I know being someone that does work for themselves, I'm not a W-2 employee of any of these companies. So I know that I have a myriad of just different options. And so what I really would love for you to do is just give us a little bit more information on the March 31st deadline. Why is there a deadline?
Well, and that kind of segues from what we were just talking about. Employers traditionally are going to let you come in during an enrollment period. The reason they do that in part, or probably certainly the majority of the reason they do that, is because they're not going to underwrite you. So when you come in If you have health conditions or anything like that, then you're still going to get the coverage.
Okay.
If they didn't have a specific enrollment period, people could just wait until they got sick and then they'd get the insurance, right?
Yeah, absolutely.
Well, the law is going to create the same situation now for the entire country, for the individual market, where someone is buying the insurance for themselves, but it's called guaranteed issue.
Okay.
Your earlier question with pre-existing conditions no longer count. We don't even ask underwriting questions anymore. No more health questions. We won't ask you about your health, okay? So think about that. Your property and casualty insurance companies aren't very likely to sell you an insurance policy when the house is on fire.
Yes.
So if you're already sick and you try to get an insurance policy, then previously you would have a very difficult time doing that, or it'd be more expensive. Now, with the government saying that the insurance companies have to give the policy to anyone and not ask the underwriting questions anymore, they have to put the enrollment period in so that folks don't just wait until they get sick and not pay the premiums until they get sick.
So just like you were saying, you know, for those that are W-2 employees, they know they have open enrollment, where that might be, you know, the month before and the month after maybe they were hired, which is maybe only a month and a half or 2 months. Now we're saying the average individual has 6 months. So let's talk about now, what about the people that do not call in before March 31st? Where do they fall in line?
That's good to say. So just like with an employer open enrollment, when that period is over, you can no longer get insurance through that employer until the next enrollment period. Well, we have the same situation now with the law. And it is a 6-month period this year. They had an extended period for this first enrollment because they had so many people they were going to have to get in, so it's a 6-month period. It'll be 2 months from now on.
Okay.
The next enrollment period will be November 15th of 2014. Your coverage, though, can't start until January of 2015. So basically, just like an employer, you have to get your insurance by March 31st. If you don't get your insurance by March 31st, then the marketplace is going to shut down until you know, you won't be able to get coverage until 2015. Now let me just be clear about something. There are qualifying life events, like if you have a baby, you can obviously open up for that. If you lose coverage, if you lost a job and you had coverage previously and now you don't have coverage, they'll open up special enrollments for you, much like if you came on and it was past the open enrollment period but you were a new employee. So think about that. You're going to have situations where, yes, you can get health insurance, but those are going to be very specific situations. Generally speaking, if you could have gotten insurance and you don't, you're going to be waiting until 2015 to be able to get that coverage. And like I said, I mean, that makes sense. They had to do that because if not, people would just wait until they got sick to get the insurance, and then, you know, they wouldn't be paying premiums. Yeah.
Okay, we've obviously hit one major. I know we had 2 topics that I wanted to make sure we covered. The first is being, there is a date. It is March 31st of 2014. You know, so obviously that individual knows that it's for people that do not have health insurance. But hold that thought real quick. John, we're gonna be right back with information on your health insurance concerns. Stay tuned. Welcome back to WLFT. My name is Chris Stanton. I'm the host today. Our topic is your health insurance concerns. And today we have John Howard, a friend of mine from BlueCross, BlueShield, and we're answering questions. And we're getting the word out that there is a March 31st, 2014 deadline. And John, you know, when we were talking before, the biggest concern is for individuals that do not have health insurance. And we understand if you do not have health insurance, March 31st is your deadline. But one of the other areas that kind of threw me off is individuals that already have health insurance, that individuals can qualify for subsidies. Give us a little information on that.
Well, obviously the law was, or I should say is very important for those who don't have insurance, and that was probably was the main crux of what the president wanted to do, was to create an opportunity for those people to get insurance. But that's not the only ones that it's going to help. There are a lot of people out there, for instance, who currently have individual health insurance that they've been paying for years, and maybe they have, for instance, some health issues, and their insurance can actually be quite high. They didn't get declined or denied, but they actually have a rated up policy.
Okay.
Now, those folks may indeed qualify for a subsidy, and there are no more underwriting questions, as we said, so the pre-existing conditions don't matter anymore. It's not going to be rated up. They'll pay the same rate as a healthy person of their age would pay as well. So a person like that, for instance, may say, well, this isn't for me, I'm already insured.
Okay.
But at the end of the day, if they call in and we can kind of go through that with them and help them to understand whether or not they have a chance to qualify for a subsidy, they may find that they get a better policy, number one, because as we said earlier, these policies that started in 2014, any new policies have to have the full gamut of benefits, the 10 essential health benefits, right?
They're not high deductible plans. They're true, not what we're used to, maybe a $5,000 or $10,000 deductible. They're more of a traditional, when you work for an employer, here's your copay.
Okay. So the benefits are pretty similar to what they've always been.
Okay.
The health benefits that I was talking about are, okay, so let's do it this way. One of the impetuses for the law was that the administration felt like a lot of people were in these bare bone policies and didn't really understand that they were.
Yeah.
I don't know if you remember hearing a
you
lot
get
about
what you
that
pay
when
for.
he talks about the junk policies and all that, right? Okay. So what they wanted to do was to sort of dictate to the insurance companies, okay, you guys have to cover these basic essential health benefits.
Yeah.
Things like outpatient care, emergency care, hospitalization.
Yeah.
One of the things that's in there now is mental conditions that mental
that it might have been excluded before.
Was oftentimes excluded before. Addiction recovery services. There's coverage for that now. So just some examples of the new law's effect on how much they have to cover the insurance companies. So someone, say, who had a health condition and maybe is paying quite a bit for their policy, and maybe because of that even had to get a policy that wasn't quite as robust as they'd like because they needed to keep the cost down because it was already expensive. If they qualify for a subsidy, think about it, they may end up with a cheaper monthly payment for a better policy. When I say better, I mean covers more things,
covers
right?
More.
So it's not just for the uninsured. Some people who are insured may find that they're able to get a better policy for less money because of the subsidies. If you're on the individual market, no one's helping you pay like they do with the employer-based coverage.
And I think the word subsidy is really, it's more of a taboo. We're not really comfortable with that word as maybe the average person. And I think what really helped me was when you really educated me on the income levels, which I know what the median income level of the Baton Rouge surrounding area, and that's tremendously higher within the health insurance industry to be able to qualify for subsidies.
Correct.
So tell us a little bit about give us the average, average family and who would qualify for subsidies.
Well, I can give you an example that would probably shock most of your listeners, and we get it every day. People are surprised to find out. They'll call in and actually tell one of our representatives, I don't qualify for a subsidy, but I need to get insurance, and just give me the full rate. And if the representative can get them to give them the information, oftentimes they find out they do qualify for a subsidy. So an example is a family of 5 under $110,000 basically is eligible, potentially can qualify for a subsidy. $110,000 and under, family of 5, that's going to cover a lot of the country. Yeah,
and especially the Louisiana area. That was really the main goal that I wanted to let individuals know that, self-employed, because we're talking about self-employed people.
Oftentimes, that's correct.
Because obviously the W-2 employee,
correct,
is most probably going to have health insurance through.
You're correct about that. There are significant numbers of employers who don't offer the coverage through their group policies, especially at this point because they've put off the penalty for the employers. So at this point, especially, but yes, mainly it's self-employed people. But W-2 employees oftentimes do not have that option at their work. And I think it's important also that that's something to mention is that the law is going to help pay the premiums as I think I mentioned
just
earlier.
Just like an employer
that's right,
would assist in paying the premium for an employee.
Yes.
Okay.
So they're going to, what I wanted to say was that if you have coverage anywhere else, if you have an option for coverage anywhere else, the law, then the government is not going to pay that. So I do want to make sure that I say that because
that if you're with an employer, you're a W-2 employee, and they offer the coverage, this plan is not even an option for you.
That's correct. As long as you have an affordable option for coverage somewhere else, and the government defines what that affordability is. And
Yeah.
but it's not just employers. If you have Medicaid or
Okay.
Medicare, or
Okay.
you can have you can actually have insurance through the Peace Corps. If you have an affordable coverage offer, or even had an affordable coverage offer that you missed for this year,
Yeah.
then you are not eligible for the subsidies. You can buy
Okay.
insurance, but you're not going to, the government is basically saying, look, we're going to take care of you if you don't have other options, but if you have other options, you need to take those other options.
Yeah.
So that's important, because at the end of the day, when you get to the end of the year, there's going to be, your tax returns are going to be turned in, and they're going to reconcile the amount you said you were going to make
Yeah.
with the amount that you actually made,
True.
which we should talk about that a little bit as well. But to stay on topic, when they do that, and they see when the employers send in who they offered coverage to, and of course in the government-based Medicaid, Medicare, they're going to know who they offered coverage to. If you took a subsidy or a premium tax credit, which is actually the real way to say it, or the official way, they're going to make you pay that back at the end of the year. And that can be quite significant, because some of the subsidies can be $200, $300, $400. I've seen $600, $700 subsidies a month. So, which gives you an idea of how much.
Hold
you
that
break
thought,
down.
John. We'll be right back with WLFT. Thank you. Welcome back to WLFT. My name is Chris Danton. I'm your host today, and we're going over your health insurance concerns. For those that just tuned in, there's a couple main points that we really want to make sure that you are up to date on. Number one is for those that do not have health insurance coverage, March 31st of 2014 is the deadline. Another issue is we're talking about the income levels for individuals to receive subsidies. But John, what I really want to talk about is, we've dealt with, if we've watched the news at all, we've seen that this has been an overwhelming experience, that this has been daunting and has really, good effort, but it's been very, very difficult to manage. Tell me what it's like for you to have, in the last 5 months, you've had to learn all of this information and, deal with having 12 months of individuals calling in to get
Right.
enrollment. Now we're down to 6 months. So the time slot has been cut in half. How have you
Correct.
guys managed it? And give us a little bit of the experience of, what have you guys done to be able to rein in this whole process?
Well, let me say that's a good way to say it. We've had a year's worth of, we've actually had more than a year's worth typically of volume, if you will, of people signing up in 6 months. So
Okay.
it has been cut
Been some
in
planning.
half. There has been a lot. I'll say that it's been challenging, and I'll say, being with BlueCross, the largest and oldest provider in our state, has certainly been a great help. So we have been able to manage it and take care of what we need to take care of. But as people may have seen, there's been a lot of changes.
Yeah.
It's a brand new law. We didn't really know fully what to expect, so we've had to kind of be able to move
Think
and
on your
change and
toes,
think on
yeah.
your toes. Yes. So again, we at BlueCross have been able to do that. It's not always been as smooth as we'd like, but typically, we've been able to overcome and take care of the people the way we need to. Now, as far as our experience with the people,
Yeah.
it's often that we get somebody that calls in and they're surprised at what they actually can get. Oftentimes people have been trying to get their health insurance elsewhere and either have had a difficult time with getting that insurance or maybe have been given wrong information.
Yeah.
Some sad stories that turned out well because they called us, but wouldn't, there's others that didn't. A lady that called in and had been told that she did not qualify for subsidies
Okay.
by another a broker or an insurance company, or it might have been one of the online services. I believe she was actually maybe from one of the online services. Whoever it was,
Okay.
they are not able to offer in the exchange, so they didn't let her know that
Wow.
she actually, I
Okay.
can't say that for sure, but all I know is that when we took a look at what she had, not only did she qualify for a subsidy,
Yeah.
a significant subsidy, but she also got what's called a cost sharing reduction.
Okay.
So, the government is going to make it affordable for people not only on their monthly premium, but obviously someone making $15,000, $20,000 a year is going to have a difficult time paying $3,000, $4,000 deductible.
Yeah.
So if you fall into certain income categories, they're also going to improve your benefits and reduce your deductibles and your co-insurance and things of that nature. So was good to be able to help that lady. We've had a lot of really rewarding stories in that regard, being able to help folks. Again, people are always surprised at how many people can qualify when they call in, and how low sometimes it can be. I mean, the two areas that I think where people are not calling in that should, we discussed this earlier, are folks who just assume they're paying they're not going to get a subsidy, and I already have insurance, and so I'm just going to stick with what I have, or they don't have insurance.
I don't want to complicate the situation.
I'll just pay the penalty, which is amazing to me.
Wow.
Because why not, call in and figure out if you can actually you're gonna pay a penalty and get nothing, instead of call in and find out. You might end up paying nothing and getting fantastic insurance from BlueCross, who has the largest provider network in the state. So some people are actually qualifying for free health care.
Yeah.
And if it's not free, it's generally, if you get a subsidy, very affordable for people. So that's not always going to be the case, but the only way you can find out is, call in and try to figure that out. Now, I do want to say that the second portion of the population are what they're calling the young invincibles.
Okay.
So you've got these young people who are
23, 24,
sure,
28,
29, 35, whatever,
Okay.
For us they're still young. So these folks, of course, feel like they're healthy, they don't need it, they've been being told it's expensive for you, they're not on their parents' policy anymore, they're out on their own or something, right? So I actually did a quick lookup before we came.
Okay.
And a 29-year-old who doesn't smoke, because smoking will raise your premium quite a bit.
Okay.
The law does allow that. So 29-year-old who doesn't smoke, here locally in the East Baton Rouge Parish, okay? 29-year-old, making $20,000 a year, let's say.
Okay.
All right. There is a plan that, with a household of one, so he's on his own.
Yeah.
He or
Didn't have
her.
any dependents.
That's right.
No
just going to
dependents.
one person on his tax returns, right? So he's got a household of one. There is a plan. It's a high deductible plan, but it's still a plan. $9.86 a month.
Wow.
Can you believe that? So
Yeah.
this is a 29-year-old. This is one of those young invincibles who thinks it's too expensive. This plan is a limited network. It's a high deductible plan, but I tell you what.
It's probably better than paying the penalty.
Oh, think about that, right? And
I'm sure the penalty is more than $9.50
cents. And getting nothing for it. So $9.86 gets him or her a plan that, catastrophic illnesses and car wrecks and things of that nature, they don't know ages necessarily.
Yeah.
And you get into a situation like that, and not only do you have insurance that will hopefully keep you from starting your life out with a bankruptcy, but as well, you're able to get the kind of care that a hospital is going to give somebody with insurance, right? So you have that peace of mind for under $10 a month for this particular person that I ran. Now that's a scenario with a limited network policy and all the rest of it.
But it's better than having nothing and paying a penalty.
And paying a penalty.
And I think the only thing that can make any sense for me from the outside looking in is it has to be about either the website is daunting and it's scary and they don't know how to do it, or we're not really sure about that. But I would definitely say that I think human nature would say, okay, going on the website, I really don't know if I'm going to do it right. I really don't want to mess myself up. Whatever I have is whatever I have. Is there a cost to be able to call up you on your phone number versus someone going onto the website? Is there any cost savings by going straight into the website and logging in versus calling you?
It's a good question. No, there is no cost difference.
So the cost is going to be exactly the same if they went on the web with no assistance whatsoever versus calling in and having somebody walk them through the steps and making sure that they get the subsidies if they qualify.
Correct. So we at BlueCross basically pay our representatives to help the clients.
Okay.
They're agents, they're representatives. So there is no cost difference. I tell you, there's a lot of differing opinions on the law. Some people really love it. Some people, of course, we've heard in the media are very much against it. But one thing that's undeniable is that for the people that it's going to help them.
Yeah, absolutely.
A lot. Now, even if you love the law, you got to know that it's complicated.
Yeah.
And buying health insurance is not the same thing as going on Amazon.com and buying buying a microwave.
Yeah.
You know what I'm
What
saying?
we're so used to doing is doing that one transaction.
Well, that's correct.
Where's the address?
So you're
what's your credit card
that's
number?
Right.
This is way beyond that.
So folks are going on and they're trying to do it that way, or they're calling the navigators, as they're called, the government assistance, folks, and they're trying to just sign up on their own and take care of it, and they can do that, and there's nothing necessarily wrong with that, but you're not going to get the same kind of guidance that you're going to get with a Blue Cross rep.
And there's no cost to that. There's no additional cost.
And there's no additional cost
that.
If you're, yes, there's no additional cost. You're going to pay the same, but you're going to get that added bonus of some help in navigating these waters.
Well, I think I think that is a great way to end the show. Is you can have the service, you can have the attention that you need to make the difficult decision, and that's why we're here. That's why we're doing this TV show, is to really just make sure that everybody is well prepared. They know there's a March 31st deadline. We also know that if you're looking to get coverage on April 1, there actually is a March 15th deadline. So if you're looking to get insurance as of April 1, you actually need to call in before April 15th. So, overall, we really want to focus on individuals that do not have coverage. Coverage is available. And for those that have coverage that maybe are not getting any subsidies, they're offered. And we really truly feel that, we know this is an overwhelming experience and this is out of the norm. But we don't have 12 months like the way we used to. We only have 6 months, and it's approaching very quick. So, John, we want to thank you for being part of the show, and thanks for giving us the information that we need. And we want to thank you, the general audience, for tuning into the WLFT show, and we look forward to talking to you very soon. Thanks for tuning in.